What's going on, everyone? My name is Jeff. Guys, I just downloaded the new software update for Webull on desktop. I gotta say, it is outstanding. If you guys have not done so yet, of course, I have a MacBook. I don't know what kind of computer you all have, but make sure you go and download Webull's new update. The software is outstanding. I'm loving the charting. And really, guys, it's better than having the app in your pocket, okay? You can trade your stocks on here, and it just takes all the tools of Webull, puts them on your desktop, and it gives you access to use them all. I was shorting stocks today. I was buying and selling some stuff. In this video, I'm probably gonna start using this software a whole lot more for my videos. I guess, guys, go down to the comments section and let me know, would you rather see the line style with a more filled in color chart, or do you like the candles? Okay, I always try to use the area charts for my videos because I think you guys can see them better and you can see the movement of the stock a little bit better. But if you like the candles or you like the hollow candles, go down in the comment section and let me know which style you prefer. In this video, what I do want to talk about, I want to talk about 5 stocks that might be considered overvalued. These stocks have been on a massive run, and I think that they run a huge risk of a crash, okay? And so I think you are all gonna see what I'm talking about. Of course, the first one on the list, you all see it right up here, and that is Beyond Meat. This is the most obvious one there is, really. And the thing about Beyond Meat, guys, this is an IPO. They have had one earnings report. In my opinion, I took several hours one night, broke that earnings report down as much as I possibly could. Nothing on that earnings report really impressed me or made me want to be an investor in that company. But since that time, this stock has ran almost another $80, okay? I know the call options are getting ridiculously expensive. The puts are getting cheaper every day. If you want to go back to when they IPO'd, this is the 2nd of May. It's a little bit ridiculous, guys. They opened at $46 and they closed at $59.76. So a very good and highly successful IPO. I don't think anybody had an slightest idea that this was going to run to well over $200. And as of today, it ran up an additional $7.44, almost 4% on a strong market, and now currently is trading at $202.90. This is a very news-driven stock, very, very highly in demand, and now is close to a $12 billion market cap. So the valuation on this stock is absolutely ridiculous. I figured the shorts and the put options, they would start to win the battle by now. It got up to $208 yesterday while it was trading. Then it's seen its way back down to $198, and like I said, up another $7.44 today. So I am still not brave enough to buy put options on this simply because the volume is not going anywhere. Okay, the average volume on Beyond Meat is 8.68 million shares per day, and it's still seeing between 7 and 10 million shares traded daily. And so depending on what kind of stock market volume we get, I notice this one is up real early in the morning in pre-market. One of the first stocks to start showing any kind of volume is Beyond Meat, and then it just trades hard all day and all afternoon. That's how I'm playing Beyond Meat. Like I said, still watching the put options. They are getting very, very cheap, and like I said, I'm looking for that volume number to really come down. All right, guys, so number 2 is Roku. It's one of my absolute favorite stocks. You can go back to some of my videos I made in December and January. Roku was one of my number 1 stocks to buy when it was trading around $30. This stock has massive growth potential. And guys, there is a lot of analysts that say Roku has room to run. This is only a $12 billion company right now. A lot of analysts believe Roku is easily a $15 to $20 billion company. So you might not see this run end anytime soon. So if you go back here to the 24th of December, you're probably not going to believe this, guys. Roku was trading at $26, even hit $25 a few times, and has made well over a 400% return since that time. Now, this is a stock that I hold in my Roth IRA, and I've contributed to it several different times. The position that I own is up over 90% lifetime, okay? And so what I'm kind of doing is just patiently waiting for a big correction in this stock price to buy more. But really, guys, we have not gotten that. Even if you look at the past 3 months, Roku has basically been on a tear, and there hasn't been a lot of noticeable opportunities to buy into the stock. Even here, the first couple days of July, Roku did trade back to $90. I think the shorts and of course the put options, they were expecting Roku to really crash off. You know, I had some put options on Roku that just expired worthless back on the 19th of July. You know, luckily I did not invest a lot of money in those. I never tried to invest too much money into one set of options, okay? Roku's earnings report is coming out very, very soon, and you might see a big reversal, okay? For example, if the earnings don't quite match the valuation, or if they for some reason have a bad earnings report, this chart pattern could reverse very, very quickly, and Roku could be trading back down to $70 or $80. But if they come in with another beat and another big raise in guidance like they had earlier this year, it would not surprise me if Roku ran itself straight to $120, maybe $130 a share. So very, very powerful stock. This stock has all the momentum at its back. And like I said, since December, I can't think of another company that has paid out a 400% return other than Roku. Might be a couple here and there. You know, I know Shopify has done really well. This one has been on fire and has not taken a break since that time. All right, guys, number 3 on this list is Shopify, ticker symbol SHOP. This is another high-flying stock. In 3 months' time is up close to 60%. And I know on this most recent pullback, ironically enough, almost the exact same time that Roku made its dip, it traded down to $285, $290 a share. I did hear a lot of people say the writing was on the wall and get ready to short this thing back down to $200. And I avoided it at all costs. If anything, if I would have made a move, I probably would have bought calls. Shopify is on fire. I don't see anything slowing it down. Even the volume stays up so very high in this stock. And really, you can chart their progress back 1 year. You see here in December, Shopify was trading at $118, now almost up to $330. So almost a 300% return paid out by Shopify. I know a lot of investors are waiting for this stock to correct itself quite a bit. So we're going to get earnings from Shopify very, very soon, the 1st of August. And again, guys, I'm just as excited about this one as I am Roku, okay? Again, I have a long position on Shopify. You know, I took it back in 2017 and I've cost basis averaged. And one thing has been very, very consistent. I've seen Amazon miss. I've seen Facebook miss. I've seen Google miss. And now we are seeing Netflix struggle a lot on earnings. And I've even seen Square and PayPal miss. PayPal missed their earnings today. One company I have not seen miss over the past 2 years is Shopify. They are just killing it quarter after quarter. And I'm honestly expecting more of the same, okay? Analysts believe this is a $45 to $50 billion company, and it currently holds about a $36 billion market cap. So, is that going to happen this upcoming quarter? I do not know. And to be honest, guys, it is too much of a coin flip. I will probably not play call options before the earnings call. I will probably wait and see what the earnings call has in it before I decide I'm playing any options on Shopify. But keep in mind, this one has run up massively over the past year and is due a strong correction at any time. The 4th stock, guys, is Lululemon, ticker symbol LULU. This stock has been on absolute fire for the past year. 1 year ago, this stock was trading at $120 and, of course, took that big dip in December, getting to a low of $113. And has raced itself back in 6 months to $192.21. Again, another stock that is absolutely beastly on earnings. And if you pay attention, the reason I brought this stock in, if you pay attention to call option volume right before earnings, this thing goes up so ridiculously high. It would almost appear like everybody on Wall Street is holding calls on Lululemon when they report earnings. Even more impressively, I think, is their 5-year chart, traded at $38 just 5 years ago. That was in 2014. Like I said, well up over 500%. This stock does not pay a dividend, and I, as a matter of fact, do not own a position in Lululemon. I did want to include this one. I think this is a stock, if they ever got a mediocre earnings report, like let's say if their revenue came in line or they had a small guide down, I think you would see this stock crash pretty hard. But as long as they keep showing up on earnings like they have, I think Lululemon is going to keep killing it. And number 5, last but not least, is Snapchat. This is a stock I talked about back at the end of the year. I made a couple of videos about Snapchat and Twitter and how my thesis has changed on both of these companies. I think Snapchat and Twitter both were a buy, and Webull was giving out a lot of free stocks of Snapchat, especially back in December when this company was trading under $5 a share and around $5 a share. And from that point, guys, some of those shares have netted a 200% gain. So for some of you all that trade in the MJ industry, keep in mind, this stock has ran 200% in 6 months. They beat on earnings massively today, had a huge raise in guidance. The stock ran 18%. However, if you go back to their IPO date in 2017, this is actually around a $27 per share stock. So I am expecting a correction at some time, but social media is making a furious comeback. Facebook had their earnings today, absolutely knocked it out of the park, and I'm a Facebook long-term shareholder as well. So do want to keep an eye on Snapchat. I think this will be trading itself back up to $20 very, very soon and should surpass its IPO price in due time. But after nearly a 200+% run since December, I would not be surprised if this stock corrected itself quite a bit once earnings season cools off. So anyways, guys, that's all I got for the video. Go down to the comments section and mention any stocks that you think I've missed or I've left out of this video. I would really love to hear your comments and opinions on that. I'm going to go back to the comments from the last video and talk to some of you all now. Thank you as always for watching the video, and have a great day.